And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock average is lower, but you know what? We're pairing some of the earlier losses. Newmont, this is the miner, the leader in terms of index points after they boosted their guidance. Meta Platforms, the biggest laggard. This accounts for about 13 points in the S&P 500. Its shares right now down over 10% after the report after the close of regular trading yesterday. NVIDIA, which has the third highest weighting in the index, that is higher right now. That is up 4%. AI chip makers like NVIDIA, they're interestingly enough higher because Meta said it was spending more on artificial intelligence. That's the stock picture right now. S&P 500, 14 points lower, down just 0.3% right now. We're at 5,057 on the index. The Dow Jones Industrial Average, 315 points lower. That is down 0.8%. The Nasdaq Composite Index, 72 points lower. That's down just about 0.5%. Now, on the rates front, we're around the highs for the year. The backdrop for all this, that GDP report earlier today showing slower growth and higher inflation. The two-year yield, 6 basis points higher at 4.99. And traders have now saying that a Fed rate cut isn't expected until the end of the year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Carol.
Hey, John Tucker, thanks so much for that update. The Supreme Court done for today after hearing arguments and considering former President Donald Trump's claim of immunity from criminal charges for trying to overturn the 2020 election. As a reminder, it stems from Special Counsel Jack Smith's indictment last August charging Trump with 4 felonies related to his efforts to stay in power after the 2020 presidential election.
Now, those charges include conspiring to defraud the government, corruptly obstructing an official proceeding, and conspiring to deprive voters of their right to vote. So the Supreme Court, we should point out, never before taken up the question of whether a former president is immune from prosecution for actions taken while he or she may have been in office.
Okay, so for what's at stake and the implications, we turn to Bloomberg News legal analyst June Grosso. June, also the host of Bloomberg Law weeknights at 6 p.m. Wall Street time on Bloomberg Radio. She's here in the Bloomberg Interactive Brokers studio. What did we learn on day one?
That's a very tough question. There was 2 hours and 40 minutes of oral argument, questioning by both sides, by the justices, and you know it's hard to sort of figure out where each justice is, especially in a question like this, because it was all over the place. But I think we can say that it looks like they wouldn't rule for Trump's sweeping claim of presidential immunity, you know, dismiss the indictment. I'm immune from anything that I did in office. But then the question is, what is he immune from? And so there was this whole discussion about official acts and private acts, and you had the justices, some of them at least, particularly Justice Kagan and Justice Amy Coney Barrett, peppering the lawyers with, well, okay, so if there's a military coup and he orders a military coup by his generals, is that an official act? If he like does a peaceful demonstration on the White House lawn, is that an official act? But then also some of the charges here. So if he I don't know exactly what it was, but it's something like if he talks to an outside lawyer about such and such electoral count, is that a private act? So you have this sort of line. Where is the line that they're going to draw? The one thing we can conclude, I think, from this is that it's very difficult to imagine any scenario that Jack Smith is going to be able to try Donald Trump before the election. He has he has that hard date of the election, and the judge has said, I think she'll give about 3 months of prep. So it looks like they're going to send this back to the lower court? To a lower court. The Chief Justice suggested the D.C. Circuit Court of Appeals. A couple of the other conservatives suggested the District Court Judge, Tanya Chutkin, to decide what is and what isn't. I mean, the special counsel's counsel, Michael Dreeben, who's really an experienced Supreme Court litigator, he said that, you know, he thought that they could go forward with just the acts that are private. I mean, it's very mystifying, to tell you the truth.
Is the Supreme Court going to hear anything more, or is that done?
It's done. In fact, today was the last day of the term. Okay. They left this argument until the very last day. In fact, they added a day. And that's been, you know, a lot of people have been criticizing them for doing that, not speeding it up as they did, for example, the Colorado case, they waited a long time to decide to take the case, and then they put it on late, and now you may not get a decision till the last day of the term, which is the end of June.
As someone who's a lawyer, like, is this a tricky case? Like, think about, like, when I'm hearing all the things that are being thrown out there, it just doesn't sound like it's a very black and white issue to decide.
Well, they've made it not a black and white issue. I mean, the D.C. Circuit Court thought it was pretty clear, and ruled against Trump. And then you had Chief Justice.
But I guess I'm asking, is it right for the Supreme Court justices to kind of be going in all these areas and to break it up that way, or does that complicate it in your view?
Well, I think that the conservatives feel that they have to do that. I think that, for example, several of the justices, which was a little bit odd to me, said, I can remember Kavanaugh, Gorsuch in particular, and Alito said, I'm not interested in the facts here. I want to, let's talk about in general. That's why all these hypotheticals. In general, what would it be? Gorsuch says, we're writing an opinion for the ages. I don't think they had to take the case. And it would have been on them to write an opinion for the ages and to inject themselves yet again into this election. I mean, how many cases are they injecting themselves into at a time when, let's face it, they're at the lowest approval from the American public ever? So it's very hard to see how they're going to come out on this, except to say that I think it's going to be delayed by sending it back. I think most people who listened said there's no way this is coming out fast, and there's no way that it's going to happen, that the trial's going to go on. So it was, no matter what happens, it's a win for Donald Trump because it's delay.
Right, and it opens the door that if he does go back in the White House, does he make this case go away? Although
they asked that too. They asked questions about presidents pardoning themselves, and there was no good answer for that.
Very interesting, and so we'll have to wait to see ultimately what we get from the Supreme Court. June Grasso, thank you so much. Bloomberg News legal analyst. There's going to be more on this. Check out Bloomberg Law weeknights at 6 p.m. Wall Street time on Bloomberg Radio. June, of course, joining us in our interactive broker studio.
Should know we also got late yesterday some election interference, other election interference news. Rudy Giuliani, Mark Meadows, others being indicted in Arizona in an election interference case, according to the New York Times. So another thing to keep our eyes on.
Yeah, we know there's so many different legal issues, including downtown New York. So keeping an eye on it. Hey, the other thing we're keeping an eye on, just got about a half an hour to go until we wrap up the trade on this Thursday. Also get some new earnings, but also one of the outperformers in today's session on the equity front, shares of Chipotle Mexican Grill. The stock up about 6.5%, so trading just off its best levels of the session.
Hitting a new record today.
Yeah. Pretty remarkable.
Yeah, pretty remarkable. This after the company lifted its full-year outlook as limited-time offers such as Chicken Al Pastor helped boost demand, continuing a streak of positive results as other chains struggle to boost diner traffic.
Always so many moving parts in terms of cost, labor, and just what the company is doing with pricing. The stock, by the way, is up about 36% so far here in 2024. We head over right now to our colleagues Sonali Bosick and Gina Martin-Adams. They are joined by Chipotle CEO Brian Niccol.
For our television and radio audiences, I'm happy to welcome now Brian Niccol, the CEO of Chipotle, who, of course, has just announced that the full-year outlook over at Chipotle would be boosted for the year because there is more growth there than at other fast casual rivals in this space here. Brian, what's going differently for you than perhaps a lot of the industry? What is driving people into the stores?
Yeah, well, great to be with you guys. And look, I think the purpose of Chipotle has always been food with integrity, using classic culinary techniques so that we give people delicious, nutritious food. And, the thing that I think we've just done even better of late is bring that experience to people in a fast way. So, one of the things that also makes our brand really special is the customization that you can get with all these great ingredients. And so we've been working hard to ensure we're staffed, we're trained, we're deployed, so that our team members can get people exactly the burrito or bowl experience that they want at a pretty meaningful speed so that people can get on with their day. So I think that's what you're seeing is the power of great food, great culinary, great people, and now also some great operations around throughput.
Can you talk to us a little bit, Brian, about the general state of the consumer? I think this stands out as a very strong success story, but also in the midst of a lot of skepticism with respect to how much the consumer can continue to spend and the general health of the consumer. What do you see from your consumer? Is it Chipotle specific, or do you generally see a very strong consumer out there?
Yeah, look, when we do the research on a broad scale basis, we definitely see that consumers are feeling a little bit of pressure on the economic side of things, right? Gas prices are elevated. They've been dealing with inflation for a while. Fortunately, the wage market has been strong and unemployment has been really low. So the good news is jobs are there, wages are there, but they are feeling pinched on, kind of their budgets. As it relates specifically to Chipotle, fortunately for us, the feedback we get is the value proposition has never been stronger. So if they're being more choiceful in how they're going to choose their $10 or $15 on a meal away from home, what we continue to hear is we're one of the great solutions for that type of outlay of cash. And so, that's why we're so dedicated to having great ingredients, great culinary, and then obviously giving people the customization that they want so they get the food at the speed that they want to. So I think that is the thing that's separating us right now is our ability to provide this great culinary, great ingredients at what are pretty reasonable prices.
It's interesting because some of your products are so popular that not just the earnings today are grabbing a lot of attention. It's this idea of chicken and the chicken shortages really being faced. We had reported that you told staff, or recommended rather, that they stop eating the chicken given the popularity of some of your chicken items on your menu. How has this been perceived by employees? There has been some pushback on the idea of itself, and do you have to change anything in terms of the way you handle the product?
No, I think this is a story that's looking for a headline. What actually happened is the supply got really tight. We asked all our employees, including myself, to pitch in for a week to maybe try something else on our menu. The good news is we're through that pinch. There's no challenges on our chicken supply. Actually, our supply team's done a fabulous job of securing supply to what has been really tremendous demand. So, look, the good news is our employees were happy to pitch in. I guess there were maybe some employees that didn't want to pitch in on this one. But in the end, we came together, did what we needed to do. And, we're going to continue to focus on giving people great experiences with our product, and that includes chicken.
It's interesting because you guys have been very fast to pivot around a lot of things here. I'm really curious around other potential ways you react to the consumer. You had mentioned kind of the general state so far, but do you think that the consumer would be vulnerable to any future price hikes? Do you think that the price hikes already have been put on products, or as far as you can go?
Look, I don't know the answer to that for everybody. The good news for Chipotle is we definitely believe we still have some additional pricing power if we needed to take pricing in the future. Our hope always is that we can hold our pricing because we want to protect our value proposition always. And I think, frankly, it's one of our competitive advantages, or really positions of strength. It's just the strength of the brand because of our unique commitment to ingredients and the speed at which we can give people these customized meals. Look, I definitely think the consumer is feeling pressure, all right? We've had inflation for the last couple of years. In some cases, things are up 20, 30% from where they were just not that long ago. And now here we are, hopefully with inflation starting to moderate, but still things are well elevated from where they were a couple of years ago. And I think that's what positions us so uniquely in this space is at the end of the day, you can still get a really meaningful bowl or burrito from Chipotle for, around $10 if you choose not to have chips and guac or drink and stuff. So, look, I would suggest everybody look hard at their value proposition and ensure people feel great about what they're getting for what they pay. And if that plays out, you'll be rewarded with business. I think that's what we're seeing happen at Chipotle.
Let's talk a little bit more about those embedded costs and just the general sort of embedded inflationary costs and how you're managing through that inflation. I know that Chipotle has several automation projects underway. Maybe talk to us about where your automation priorities are and how much that might offset the margin pressures from steadier inflation.
Yeah, so thanks for asking about this. Obviously, we set out to figure out what are ways we can be more productive in the restaurants. And specifically, we started with asking our employees, what are the what are the pinch points? What are the things that are, most challenging to do? And one of those things that came up was cutting, coring, and scooping avocados every morning to make our guacamole. And so we've created a new robotic or cobotic device that will cut, core, and scoop the avocado. We still have to hand mash it, and we still have to, add the cilantro, lime, jalapenos, and onions and stuff. But, it gets rid of some of the harder parts of making guacamole every morning. And that's just one example of many other things we're looking at. We got feedback that frying the chips is a difficult task. So we experimented with a robotic arm to fry the chips. That one hasn't worked out, so we're going back to the drawing boards. But the good news is the learning from the robotic arm for frying chips informed what we did on designing what we call Autocado. And then other places that we're looking to build innovation is on our digital make line. Is there a way for us to help our employees build bowls and burritos on that line so that with the one or two people working on the line, they're capable of producing even more burritos and bowls. So other things too, like AI, machine learning to help us in our rewards program, our forecasting, our supply chain. So I'm really optimistic about the innovation that we've got coming down the pike. Obviously, we have to take it through our stage gate process, validate it, ensure that it really plays out the way we want. But I think we're hunting in the right places that'll make the job better, protect the experience for our customer, and provide no compromise on the culinary.
It's interesting, speaking of inflation, curious about the California $20 an hour minimum wage for fast food workers. Since this has happened here, curious, Brian, about your view on what else would be impacted with that rise in minimum wage for workers here. How do you think about how that fits into your broader cost picture and whether you need to make changes elsewhere?
Yeah, I mean, look, obviously, we moved wages accordingly, and then, I'm sure you're familiar with this, but that creates compression for wages throughout the business, meaning managers and apprentices and people that have more tenure at the crew level. So we adjusted all those wages accordingly. And we did take a price increase in California to offset the wage inflation that we're dealing with, which is close to 20% wage inflation. And what I'm happy to say is, we didn't have to change anything else. We're not cutting corners on our food. We're not cutting corners on portions. We're not cutting corners on the speed at which we provide our service. We're committed to giving people the Chipotle experience they know and love with the culinary that they know and love. And, obviously we had to raise prices a little bit, but, the reality is it's more expensive to do business in California, and, we adjust accordingly.
Brian, we thank you so much for your time. We should say Chipotle shares actually today hitting a record off the heels of those results as well. That is Brian Niccol, the CEO of Chipotle Mexican Grill.
All right, everybody, as we said, the CEO of Chipotle Mexican Grill stock just up about 7%, just shy of 7%, so trading off its highs. We talked last week about the employees not being able to eat chicken. Well, apparently now they're saying that the workers can go back to ordering freely.
Supply chain issues.
Supply
they're
chain issues.
still working on it.
Yeah, they're still working on it.
Everybody's working on it.
Yeah.
Airbus is working on it.
Everybody's working on it. Also, John Tucker working on what's going on in the markets. Let's toss things over to John Tucker with a Bloomberg Business News Flash. All yours, John.
Thank you kindly. Stocks coming off the worst levels of the session. Risk assets did get a big hit initially after that GDP report we got this morning showing slower growth and higher rate of inflation, initially raising fears of dreaded stagflation, but, a closer look under the hood, that kind of eased the concerns. In fact, there's still resilient household demand and business investment if you look deeper into this report. Now, after the close of regular trading, of course, we get the next two members of the so-called Mag 7 cohort of stocks, Google parent Alphabet and Microsoft. Still feeling the impact of Meta earnings. Those shares down right now close to 11%. Investors worried over their spending, but what they are spending on is helping other stocks. That would be artificial intelligence, spending on AI benefiting stocks like NVIDIA. Those shares, they are up right now about 3.75%. Overall, the S&P 500 down 24 points right now, down just 0.5%. We're at 5,047. The Dow Jones Industrial Average 371 points lower. That's down under 1%. And the Nasdaq Composite Index 118 points lower. That is down 0.75%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 19 minutes left in today's trading session, getting ready to wrap up the Thursday trade. Bouncing around here, but we're definitely, as we keep saying, off our worst levels of the session. Down across the board, but nonetheless, not as much of a risk-off or negative tone as much as we saw earlier in the session.
Well, let's hear what Melissa Otto has to say about this. She's head of TMT research at the fintech firm Visible Alpha. It provides buy and sell side research. She joins us here in the Bloomberg Interactive Brokers studio. I want to talk tech because that's like your wheelhouse, and it's a perfect day to have you on.
We really care about it right now.
In the wake, I mean, first of all, everything's tech now. But you know, the big tech players are the ones that are reporting earnings this week and next. So we had Meta Platforms yesterday. We have Alphabet and Microsoft after the bell today. First up is Meta Platforms. Is this a sell-off oversold? Is this like overdone?
First of all, thanks for having me on. And what a wild day in the markets to be here speaking with you about tech. The backdrop is a jungle at the moment. I mean, there's so much happening both from an earnings perspective and from a macro perspective. I think to address your question around Meta, coming into the quarter based on Visible Alpha consensus over the past couple of months, we didn't see numbers moving that much into the quarter, which suggested that consensus was fairly stable. So when they came out and said, we're actually going to move our expense numbers, those expense numbers were actually higher than expectations, which...
The upper range, right? Certainly.
The upper range. The market did not like that. And it wasn't a one-off because Mark Zuckerberg came out and said, this is something longer term. We're going to be investing for a while. It's going to continue. And I think what we also heard from him was about Reality Labs. Reality Labs also continuing to see continued losses. And I think that was one area of the business where...
That's not a surprise, though. I mean,
it's
where
it
wants to go, but it's kind of cost a lot of money, and it's not like we're walking outside seeing people wearing these headsets around.
The investment community was probably hoping for a bit more efficiency and discipline around that area, but he essentially came out and said, no, that's not happening. And I think the combination of those two things, the market didn't like it.
You know, it's interesting, right? And they certainly learned their lesson, right? Prior to the year of efficiency, kind of get that. And then kind of got their act together. The stock was off and running big time last year, and we certainly have seen it move this year. You know, our own Mandeep Singh saying, you know, there's a range there. And so it'll be interesting to see what they say about this quarter and whether or not they bring in that range and say, all right, so maybe it's going to be at the lower end. We got the message kind of thing.
But I think what also Mandeep said that really stuck with me, Carol, was this idea that imagine the company making a $50 billion investment or $50 billion purchase of a company.
Right.
And having nothing to show for it because that's how much money it's going to end up spending in this.
Indeed.
That's a lot of money.
Indeed. It's an incredible amount of money that has not really netted much ROI to shareholders.
So the research that you are doing now around Meta, what are you saying? You know, are you saying that it's not a buy at this point? Are you saying it's a moment where you take some off of your holdings in Meta? Like what is it that you are advising?
The expenses around Meta and its investments in AI are going to be significant based on what the company has said. And what we imagine for our consensus data is that there could be some additional upward revisions to expenses going forward this year and next year. So that's one area of the fundamentals that we're watching very closely.
Okay, I want to shift now to what we have coming later today, Microsoft and Google parent Alphabet. What are you seeing in consensus over at Visible Alpha?
It's a very interesting backdrop for both companies right now. And I think when we look at similarly, coming into the quarter, we're not seeing a lot of movement around consensus. And that suggests from a top line and an EPS perspective that the market kind of has come out and said, okay, this is what we think is priced in. However, when we dig beneath the surface, there's different things happening. For For example, for the Azure business, the intelligent cloud operating profit margin has a massive range between either 41% on the bear side or 50% on the bull side, which gives us a consensus operating profit margin based on Visible Alpha consensus of 45%. But that's a pretty significant range in terms of what that business could deliver, and it's an enormous business for Microsoft. Azure revenues based on Visible Alpha consensus could be around $74 billion this year, $94 billion next year. And I think what we haven't seen is that any movement of that. And going into the quarter, I'm wondering what sort of commentary Nadella is going to come out with, and what's he going to say about the OpenAI business, about the OpenAI partnership, about Azure AI, how that's ultimately going to start to deliver an ROI and have a real meaningful business impact on these fundamentals.
So the consensus data is saying what, basically? That it's going to be hard for them to live up, or what?
There's a lot of debate out there. There's controversy in that range because of the significant range of the operating profit margin for the intelligent cloud business. It means that there could be surprises.
Yeah.
And so that's what's really interesting.
Because what you look for is a tight range, right? Or as
That's
much,
right.
or, in an ideal thing, it's one number, right? Basically. I mean, I don't know how often that happens. This is your world. How often does that happen?
It does absolutely happen. So when I look at Microsoft's overall revenue, it's in a fairly tight range.
Okay.
But when I go beneath the surface and look at the details, for example, the intelligent cloud business, the Azure business, within the intelligent cloud business, that's where you see that nuance.
How concerned should investors be about what these two companies tell us today about how much money they're investing and how much they're spending, given what we saw from Meta?
They've both been spending an outrageous amount of money.
But is it going to spook investors the way that Meta Platforms did, or does Meta have that history of 2 years ago saying, hey, we're throwing in the towel on the Facebook product and we're switching totally to the metaverse, so it's sort of a different type of investment?
I mean, it is one area that we have been seeing clear trends in the numbers moving upward, is that CapEx numbers for Microsoft have been steadily increasing over the next couple of years. Those estimates continue to creep up and have been really since last year.
I bet.
Which implies that the CapEx expectations continue to be positive. And I think that's somewhat correlated to what we hear from players like NVIDIA.
Yeah, it's interesting. It's just a metric as people are building out their AI and all the players in it, right? Like a different thinking about CapEx, you need the capital expenditures to do it. But is there a point where it becomes a little bit like, wait a minute, do we really understand? Are we outspending maybe the potential payoff? I guess we're kind of in that no man's land. I'm trying to figure that out right now.
Indeed. Yeah, and I think you also mentioned Alphabet. Alphabet is also another interesting one. Also, the top line in EPS consensus haven't moved much.
Yeah.
But again, going beneath the surface, some really interesting movements also in their cloud business. The Google Cloud operating profit margin based on Visible Alpha consensus went from 8.7% to 7.3% over the past couple of months. And that's a pretty big move, 140 basis points in margin. So it implies that
we got to run. We got to run. Forgive us. Lots of numbers, but lots of things to think about as the earnings come out. Melissa Otto, she's head of TMT research at Visible Alpha, and this is Bloomberg.
news headlines on Bloomberg Radio.
Yeah, I'm John Tucker in the newsroom. We'll look at some of the company stories we're following. Well, keep your eye on the bouncing ball. The NBA advancing toward a series of major media deals with Amazon and YouTube vying for a new streaming package, and NBC Universal trying to grab one of the main TV deals that's held by ESPN and TNT. Interest is pretty high in the league's next round of packages, which actually kick in after the 24-25 season. An exclusive negotiating window for Disney and Warner to renew their deals that expired at midnight Monday, and it clears the way for the league to have formal negotiations with other suitors as well. Southwest Airlines may ditch open seating. This is a classic hallmark of its business model. They may instead offer assigned spots and premium seats. This is a bid to appeal to a younger generation of travelers. The move arguably would be the largest change undertaken by the carrier since it began flying back in 1971. Well, last year, Southwest acknowledged it was monitoring growing industry-wide preference among travelers for premium products in the air. And Napa Valley, yes, a wine story for you guys. The heart of California's $57 billion wine country is ripe for M&A.
Can't believe you went there.
As the founding vintners who built the region into a global powerhouse think about the next steps, as the industry actually consolidating, so the need to pass the torch coincides with a downturn in demand, record levels of private capital, and interest among luxury brand owners like LVMH and Chanel, and companies like Constellation Brands and Treasury Wine Estates. They're shifting toward premium labels. So that's the latest from Wine Country and their company news.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just
that John Tucker.
I know.
They don't make them any better than that.
They don't make them like them.
They broke the model.
anymore.
Is that what they say?
Yeah,
They broke the mold.
They broke the mold.
They broke the mold.
He's a good guy, too.
Yeah, he's okay.
I like it when he sits with us.
No, he's a great guy.
Hey.
Makes me laugh. I like people who make me laugh.
Carol.
What?
We got a lot coming up in just a few minutes.
Folks, man, the earnings parade, and it's a big one. You're talking about the likes of Microsoft, Alphabet, what else?
Intel. T-Mobile, Roku, Gilead,
Roblox.
Snap, Capital One. Roblox, too?
Did I say Roblox?
Roku.
Oh, maybe I meant Roku. Yeah, well, sorry. Roblox will get out at some point.
Yeah.
That's all right.
I'm
I
gonna
will jump the gun. All right.
Roblox
Focus,
is next month.
because there's
May
going to be...
9th.
Sorry, but this is like the biggest week when it comes to first quarter earnings. So there's a lot. But it's going to be interesting coming off of Meta, which definitely got smacked down in the markets today, to say the least. The focus, once again, on AI. There's cloud, right? There's
What are you looking
advertising.
for from Microsoft?
What am I looking for? Azure, right?
Okay.
And their cloud business. We heard it from from Anurag, excuse me. Much smarter than I am. But, in terms of what's the number one thing? What's happening in the cloud for this company?
Okay, and Mandeep gave us a preview of what to do from Alphabet. The company expected to report an increase in revenue in the first quarter. Mandeep telling us to keep an eye on what happens with Google's search business. Is it remaining competitive in the age of AI? How is the new technology going to affect its core search and digital ads business? Wall Street expecting sales, excluding partner payouts, that's traffic acquisition costs, of $66.1 billion. That's up 14% from a year ago.
Saying it's still all about engagement, right, for that company, Alphabet specifically. But these are companies that we know, right, folks, have had a lot of momentum in terms of where the market goes from here. In an environment where the market is definitely getting a little bit skittish on concerns of a higher rate environment, but earnings certainly at play too in terms of the trajectories. Quick check, if we may, if I just want to look at what Microsoft is doing ahead of earnings, we're seeing Microsoft down about 2.3%.
One of my decliners.
Yeah, oh, it is.
Yeah.
Okay, and then if
Why
I
not?
look at
Why
Alphabet, it's a good way to set it up. It's down about 2%. So we've seen a lot of these big names certainly losing some ground today.
Okay, speaking of losing some ground, just a quick check of the markets going into the close. Down half a percentage point on the S&P 500. We're down as much as 1.6% earlier in the session.
Yeah.
Carol, the NASDAQ down 0.6%, the Dow down a full percent.
A little bit of a swing, no doubt about it. All right, folks, over to our TV colleagues. We're going to talk about the trade. We're going to take you down to the close, and we're also going to break those earnings. Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg Exclusive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Shonali Bazik and Gina Martin-Adams count you down to the closing bell. And here to help us take us beyond the bell with a global simulcast, we're joined now by Carol Masser and Tim Stenivek, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the crucial moments of the trading day. And certainly it has been quite the day, Carol.
Yeah, interesting, right? And we're definitely well off our worst levels of the session. Having said that, I look at the S&P 500, you still have more than 300 names to the downside. And folks, if you look at some of the ones that are going to be reporting, Google, it is down right now just shy of 2%. Microsoft, it is down about 2.4%. So you're seeing these names as we get ready for earnings trending lower in the trade.
Incredible range in today's trade, too. The NASDAQ 100 down half a percentage point right now. It was down as much as 2% earlier in the session. Gina, the S&P 500 down more than 1.6% earlier in the session, now down only half a percentage point.
Yeah, and a nice climb back. And tech is not leading the downdraft, which is interesting considering all the nervousness around tech. This really seems to be related to Meta and a market that was caught off guard by what Meta said regarding their spending and their future growth prospects. It's definitely weighing on the rest of the communication space, putting a lot of pressure on Google after the close, or Alphabet, as the younger folks say. Nonetheless, I do think it's notable that tech stocks are actually in the green now, the tech sector rising, and that's helping the broader S&P 500 claw its way out of this negative territory.
Yeah, it's interesting, and we'll see what today has to bring as well. Just a lot of uncertainty out there as we wait to see what more of the tech giants have to say. We are getting the bells here now down to the close, and we are indeed ending the day again in the red here. We're looking at the S&P 500 really still down on the day, having closed close to 0.5% lower, with even bigger declines here on the Dow Jones Industrial Average, down almost 1%. That NASDAQ 100 now down about 0.6%. Of course, snapping that winning streak we saw earlier in the week.
All right, guys, real quick on some of the movers in today's session. NVIDIA, that stock up about 3.6%. This has to do with what we got from Meta, basically, because as they have saying, we're going to do up our spend, our CapEx. We're doing a lot of things when it comes to AI. So companies that play in the AI space benefited, and that included NVIDIA. It was up about 3.5%. And you also had Supermicro. It was up about 4.3%. Hey, folks, we've got Microsoft, so let's get to it. Crossing the Bloomberg terminal. Third quarter revenue, $61.9 billion, better than what the street was forecasting. That was a forecast of $60.87 billion. Third quarter EPS, we're looking at $2.94 a share. Let's go to cloud revenue, so key for this company. Intelligent Cloud for the quarter, $26.71 billion, better than the street forecast of $26.25. Looking at personal computing revenue, that too a slight beat, $15.58 billion versus the estimate of $15.07. Productivity revenue, pretty much on target, $19.57 billion. The street was looking for $19.54, but that third quarter revenue, folks, coming in better than forecast, and you've got the stock up almost 5% here in the aftermarket.
Yeah, expectations were for about $61 billion. We're seeing it at about $62 billion for the third quarter. Going to the press release, looking at what Satya Nadella, chairman and CEO of Microsoft, has to say about the quarter, quote, Microsoft Copilot and Copilot Stack are orchestrating a new era of AI transformation, driving better business outcomes across every role and industry. Shonali.
Now, it's interesting. We do have Intel also now out. You do have adjusted EPS forecast missing analyst estimates here. The second quarter revenue is estimated to be $12.5 billion to $13.5 billion, and the estimate had been $13.6 billion. A little shy of expectations there, even with revenue very narrowly beating estimates here. Intel shares now down more than 2%, fluctuating more than 2.5%. Quickening its losses now after market.
And what a contrast between the two. You've got the software company contrasting with the hardware company. Clearly, Microsoft has been just a dominant force in software, investing in all the right places, growing in all the right places. Intel, a little bit of a different story, and that's definitely showing up in this quarterly earnings season with not necessarily bad results, but not an across-the-board just pummeling of expectations like that, which we saw from Microsoft.
Okay, let's get on over to Alphabet because we're seeing the results come right now. It looks like a beat when it comes to first quarter revenue, $80.54 billion, beating estimates of $79.04 billion. First quarter EPS, wow, coming in way above expectations at $1.89 versus estimates of $1.53. We're also seeing first quarter operating income significantly beat expectations, up $25.47 billion versus $22.48 billion billion. The stock just surging right now, up 8%.
Well, taking a page from, should I say, whose book? Meta's book. The company, the board approving initiation of a cash dividend, declaring a cash dividend of 20 cents a share. You want to know why the stock is really popping in the after hours? That's got to help in a big way.
Well, it's interesting. You're just seeing it soar past 9% after market in Alphabet right now, and you are really seeing these results coming out of Alphabet and Microsoft shrugging off a lot of those problems we saw in technology earlier in the day.
You got to go there.
Yeah, share buyback too. This is something that investors are certainly loving right now. Alphabet authorizing to buy back up to an additional $70 billion in shares. Shares of Alphabet higher by 9.5%.
Definitely needed this in the communication space, which was really beholden to what Meta said with respect to the outlook. This should turn the tide for communications at large, depending on what the other stocks do. But remember, this is the 4th largest stock in the S&P 500. This could make a really big difference to the tone of the market as we open up tomorrow.
I got to say, that Alphabet move, man, that is just a big one. 9.5% to the upside here. You know, initiating a dividend, a big buyback. And what's interesting is talking with our own Mandeep Singh about, you know, Alphabet. It's all about engagement, and this is what you want to see at this company. Advertising revenue at Google, 61.66 billion. That was above street estimates. YouTube ads revenue, that was above what the street was anticipating. Services revenue coming in. So really, cloud revenue, that too was above what the street was expecting. So you look at all of the businesses across the board, but what's really key, again, this is an engagement company. This is about advertising, and that is certainly firing on all cylinders.
Yeah, worth reiterating the cash dividend of 20 cents per share. Also, the company authorizing that share buyback at up to an additional $70 billion worth of shares. I go to the press release and I look to see what Sundar Pichai, CEO of the company, says, that the results in the first quarter reflect strong performance from search, YouTube, and cloud. We are well underway with our Gemini era. That's what investors want to hear about. And there's great momentum across the company. Our leadership in AI research and infrastructure and our global product footprint position us well for the next wave of AI innovation. Remember, investors want to see that the company's search product is keeping up when it comes to AI and competing effectively against everyone else who's working on integrating AI tech into search, aka Meta platforms.
Every headline crossing the wire is making investors love this story more. Look at that, 12% higher on the day, and it's because not only of that $70 billion share repurchase reauthorized here, you also have that cash dividend declared of 20 cents per share. And not only, Tim, to your point here, Sundar Pichai just really highlighting here the Gemini era and momentum across the company, particularly leadership in AI. You do have him really expanding more there in their operating results about consolidating their teams, as they've announced, that focus on building AI models. So driving efficiency here while focusing on the future, that's what's holding on here to this stock right now.
All right, guys, so you've got Alphabet up about 12% in the aftermarket. You've got Microsoft a gain of about 5.5% in the aftermarket. Made me want to look at the NASDAQ 100 E-mini futures, and you've got that up, that index up about just shy of 1%, so providing some upward momentum overall to certainly the NASDAQ trade.
Okay, let's go back and check out what shares of Microsoft are doing, up 4.5% as we speak. Shares rising after third quarter revenue beats estimate. Worth repeating these headlines. Third quarter cloud revenue coming in above estimates at $35.1 billion. Estimates are for $33.93 billion, so a beat there. Also, third quarter revenue coming in at $61.9 billion, handily beating those estimates, Gina, of $60.87 billion.
Yeah, and a nice little payout to shareholders as well. More than $8 billion, $8.4 billion to shareholders via dividends and buybacks over the quarter. That I think is a very welcome surprise for investors that are really counting on Microsoft to be a spender, but then give a little bit back to shareholders, and it certainly adds a bit of juice to the stock price, which is soaring in after hours.
Very different story. So Microsoft soaring, Alphabet is soaring. Not the case when you look at Intel. That stock in the aftermarket, we're looking at about a 5.5%, almost 6% decline here as we speak.
The weak forecast.
Exactly. Giving a weak forecast, you know, biggest maker of personal computer processors, such a big part of their story, but giving that lackluster forecast for the current period. It is still struggling to right the ship, turn it around, and kind of get back to the top tier of the chip industry. Having a tough time. All right, guys, lots of names.
Was that enough for you?
These are some big names and some big movers, so we're going to certainly track this into the after hours and certainly into the Friday trade. All right, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We will see you again, folks. Same time, same place tomorrow.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Shares of Alphabet just soaring in the after hours right now, Carol. Higher after the company reported earnings. Up as we speak, another 13.6% in the after hours right now. This after declaring a dividend, boosting a buyback, authorizing a repurchase of up to an additional $70 billion in shares. First quarter ad revenue coming out above expectations. First quarter, also declaring a cash dividend of 20 cents per share.
All right, so let's get to it. James Chakmak, so much to talk about. He's partner and technology analyst at Clockwise Capital. He joins us from Miami. First of all, Alphabet feels like I can't find anything wrong here. Walk us through. Is this just kind of firing on all cylinders, and if you will, and then just throwing on a dividend and then throwing on an additional buyback?
Yeah. First, thanks for having me. For Alphabet, this was a tough one, because we had the Meta earnings last night, uncertainty as it relates to the sustainability of the top line growth metrics. And obviously, Alphabet via Google had, uncertainties around their search business. And at the same time, this growth in CapEx spend, is that going to translate over? So, we were kind of debating what to do. And going into the quarter, we actually rotated a portion of our Microsoft position to triple up our Alphabet position. So thankfully that worked out. But
That's
I think the key for Google, they're both up. So yeah, it worked out. But
so why did you do it? What was it that you saw, James, in the Alphabet story that you said you wanted to do that?
Well, the main thing was the relative valuations. The expectations for Microsoft were exceedingly high, and the expectations for Alphabet were exceedingly low. And you look at one's trading at 22 times earnings, and the other one's at 35 times earnings. So you know what kind of the risk reward is, and especially we had some sense of how things might trade if they came in on a bear kind of narrative, given how Meta traded. So. It really just boils down to that. But the fact that Microsoft was able to exceed those nosebleed expectations is a testament to the trends and the force of trends that we're seeing in the shift to the cloud and AI more broadly.
Hey, I just want to get your thoughts on Snap because it's a company you've been covering for years.
We love to ask about that every time.
Through the good and the bad. Well, the reason I'm asking is because shares are up, surging as we speak by more than 20%. 25% at this point.
Yeah.
This is after the company reported.
They are down 32% year to date.
They are. That's important context. The company is seeing second quarter revenue from $1.23 billion to $1.26 billion versus estimates of $1.21 billion. As Carol mentioned, it's been a brutal year so far for Snap. How are you reading into these results? And you don't own Snap anymore, do you?
No, not for a long time. With Snap, they were supposed to be the camera company and transformed into, exactly what they were initially, just messaging and some content initiatives. But at the end of the day, I think it's really, really hard for these niche platforms to scale in the manner in which is necessary to provide the differentiation to advertisers and the return objectives and the return enhancements on that ad spend. So I think that the disparity between these niche platforms like a Snap versus the likes of Alphabet and Meta will only increase from here. The caveat being that you have companies like Pinterest, which we used to own but sold, just given the fact that they had our target, have more opportunities because of the engagement that they bring that is likely to grow over time versus, stick to a more static rates, which is from the likes of Snap.
All right, we've got to go back to Google. Forgive me, Alphabet. I keep calling it Google, but I mean, of course, Alphabet. I know. Up 12.5% here, folks, in the aftermarket. This stock heading into it had about a 12% gain on the year here in 2024. The stock was up almost 60% last year. But, when you look at Alphabet James, and you look at its business lines and its roles and its play, whether it's AI, whether it's still advertising in a big way, our own Mandeep Singh saying, this company is all about engagement. That's kind of so valuable. And that's going to be valuable certainly in terms of machine learning and Gen AI. This is really important stuff. I mean, how do you think about, Alphabet in kind of its future growth trajectory and kind of where it goes from here? I mean, this is a pretty impressive report, but it's also, right, appeasing investors of saying, we're going to throw some cash back to you.
Absolutely. I mean, anything with respect to returning capital to shareholders or, getting religion on the cost side of their business and utilizing their cash flow for more constructive purposes rather than throwing it into black holes, which is the way that they have been operating for as long as I can remember. That being said, I think that the future for Alphabet and Google, still remains a question mark. We don't know, and I don't think anyone can definitively say what that search environment experience is going to look like in the future. If you look out 5 years down the road. Now, the good news is all of this stuff seems to be like coming at you fast, right? All the AI, I mean, it's since January of 2023, it's been coming hard and fast. But the good news is on the behavioral aspect and the consumer experience, things have changed with ChatGPT and whatnot, but things aren't changing that fast overnight, which affords Alphabet time to really figure things out, whether it's cannibalistic to their existing search business or not. I think we have time. So I think extrapolating too much too soon is a risk. So as long as they have the time, they might figure it out. They may not, but they might. But
James,
I look into 2024 and 2025, and that's it.
Could critics argue about Alphabet that declaring a dividend and boosting a share buyback potentially isn't the best use of money right now? Perhaps they should be investing more in AI. Perhaps they should be investing more in making sure this search product is bulletproof.
Yeah, I mean, they're throwing off tremendous amounts of cash as it is, and they're investing a lot. And you look at the margin disparity versus a Meta, they have a lot of cushion there. And they're investing, strongly as well. So I don't think it's mutually exclusive. So long as the ball continues to move forward, which is what we need to see, and we'll see what the color commentary is on the call, I think it'll be okay. I think the longer term is where the questions linger. Shorter term, it'll be fine.
All right, so let's go to Microsoft because it's also the other big one, or one of the big ones after the close. It's up about 5% here in the aftermarket. This one, sales and profit beat expectations on robust AI demand. That's the headline on our story. So quarterly sales and profit climbing more than projected, lifted by corporate demand for Microsoft's cloud and AI offerings. Revenue, as we said, up 17% in the third quarter, $61.9 billion, profit $2.94 a share. Analysts on average estimated per share earnings of $2.83 on sales of $60.9 billion. So again, outperformance here, and we know that Satya Nadella has been really infusing all of Microsoft's entire product line with AI technology, thanks to its partner OpenAI. So thoughts on Microsoft, what we got here in the quarter, what it tells you about their business today and going forward?
Yeah, what's most amazing to me is the fact that they're able to maintain the growth rates, no matter how big their revenue base gets. And the fact that they're able to deliver the numbers that you just cited and do so in an efficient way where earnings are continuing to grow at the same rate. So it's not there's no contra indicators on, sales versus spending. So I that to me, the sustainability is the biggest and most impressive component of their operations. And most importantly, broadly, I think you can extrapolate that the themes on the data center spend and the semiconductors like the NVIDIAs of the world and the direction of corporate enterprise and their appetite for shifting from analog to digital is as strong as ever. So I think it's a very, very good omen for a lot of these companies and being at the center of it. Because you can make any analogy that you want. We're in the first inning, third inning, whatever. But right. I think the main thing is that the world is going to, I think Sam Altman had this quote that he said, the technological changes that we've seen over the last 500 years, the changes over the next 50 years will be greater than the technological changes over the last 500.
Right.
You know, so that's the pace of change that we're talking. And a lot of that's going to come in the first decade. And these companies are all at the epicenter of it.
Just want to point out, Azure, Microsoft's cloud computing unit, revenue gaining 31% in the quarter, above an average prediction of 29%, so picking up slightly from the 30% growth in the previous period. So, you know, that's a trend line. If you're following it, right, you want to see.
I mean, there's a chance we see both of these, depending on what happens, there's a chance we see both Alphabet and Microsoft hit new records tomorrow in today's trade, depending on what happens. Okay, I want to talk, James, just a little bit about Microsoft's legacy here and the way that it's been able to shift and embrace AI. Where's the most important part of looking at Microsoft's growth moving forward? I mean, I know we obviously know Azure is incredibly important, but the company has made a huge bet on AI with OpenAI. Where do you start to see that investment and its relationship with OpenAI manifest in earnings?
I think it's going to be, you know, exactly, you'll see it in the Azure business, but more broadly in the intelligent cloud segment. I mean, it should continue to translate on that front. But it's not just that segment. It's going to feed into other parts of their business too. You know, on the subscription side of their software services and potentially even gaming. And, you know, so there's a lot of levers, I think, that will be pulled from that relationship. And as the world and corporate enterprise continues to move in that direction, more data is going to feed into it, which is going to fuel even more efficiency with respect to the capabilities that they do. And, you know, Copilot, you know, for instance, is just on the, I don't want to keep saying first inning, on day two of its potential. So, and there's a lot of money to be made there. That you'll see that I don't think is being appreciated at all, virtually at all right now.
These are all different companies, but they're all working on AI, and to a certain extent, they're competing with each other when it comes to that technology, no question. Given what we're seeing from shareholders in reaction to Microsoft and Alphabet today, and given what we saw today in the session from reaction from investors to Meta Platforms sending shares for their worst day in months, what did the two companies that reported today get right? Or maybe a better way to ask is, what did Meta Platforms get wrong?
What did Meta Platforms get wrong? I think what they got wrong was largely related to the management of the expectations. You know, there was no indication around the pace of investment that's necessary to sustain the kind of growth. I mean, they talk very qualitatively about this is a big opportunity ahead, you know, all the metaverse and yada, yada. But, you know, there was no pushback whatsoever on the questions and commentary with respect to, you know, how we should expect the pace of investment to ramp to justify and capitalize on the trends that Zuckerberg talks about. So I think it was more of an expectation versus reality mismatch that probably could have been better managed.
All right, let's just remind everybody the big earnings after the close and those that have really outperformed here and showing some stunning moves to the upside. Microsoft among them. That stock, as we mentioned, it is moving up just about 4.4% here in the aftermarket, and the company coming out, sales and profit beating expectations, lifted by corporate demand for the software makers' cloud and AI offerings. We talked about Azure gaining revenue alone, gaining 31% in the quarter. That was above analyst expectations. Revenue in the third quarter overall up 17% to $61.9 billion. Profit was $2.94 a share. Analysts on average estimated per share earnings of $2.83, so below what they actually came in with. And the estimate for sales was $60.9. So again, really hitting it out of the park when it comes to those estimates. And that is certainly one reason why you're seeing the stock, or a big reason why you're seing the stocks up the stock of Microsoft, I should say, up at the aftermarket.
Okay, let's repeat a little bit of what we saw from Alphabet. The company's first quarter Google ad revenue coming in at $61.66 billion versus estimates of $60.18 billion, and the company authorizing a repurchase of up to an additional $70 billion worth of shares, also declaring a cash dividend of 20 cents per share. First quarter revenue, excluding traffic acquisition costs, $67.59 billion, beating estimates of $66.07 billion.
To the downside, Intel. Shares are down more than 8% here. Biggest maker of PC processors, lackluster forecast from the company for the current quarter, indicating it's really still struggling to kind of find its way back to the top, if you will. Sales in the second quarter will be about $13 billion. That compares with an average analyst estimate of $13.6 billion, according to our data here at Bloomberg. Profit, again, the outlook will be 10 cents a share minus certain items versus a projection of 24 cents. So that's a pretty big miss. We're talking with James Chakmak, partner and tech analyst over at Clockwise Capital. James, is there some underlying theme? We're not through all the Mag 7 companies. We've got, what, Amazon next week? And,
yeah, we got NVIDIA in a while.
Right?
Yeah.
So we've got some other players to get through.
Next month, NVIDIA.
Is there any themes that you're finding, certainly for the investment community, when it comes to especially these big tech names, the Mag 7 often, who haven't always been so magnificent as of late, what they're saying and kind of their impact on the overall market? Is there some big takeaway here for you?
I think the biggest takeaway is that the sellers of these data center services are the best place to be. You know, from NVIDIA to Dell, and there's the server side, like we own VRT, which helps with the cooling systems, comfort systems. You know, so there's a lot of these companies that play into building out the companies that are selling to the hyperscalers. I think will continue to be in a great position. Now, as far as the Mag 7 is concerned, I do think, you know, the market is still in a state of choppiness and volatility, and I think that's going to last until we have better clarity on what the Fed is going to do. And you saw the GDP numbers today, so there's mixed messages as to which direction macro is going versus tech and which one to prioritize. Because if you prioritize the economic cycle, then that means valuations are at risk. If you prioritize the tech cycle, that means that earnings are the focus. And right now we're in this world where some days valuations are in focus and other days earnings, like today.
Hey,
so I think you just got to stay nimble at the end of the day.
Hey, James, last question, 30 seconds here. I'm looking at Time U.S. equity on the Bloomberg terminal. This is the Clockwise Core Equity and Innovation ETF. It is up this year a whopping 18.3%, outperforming all the benchmarks. Amazon is your second biggest holding after T-bills, accounting for 5% of the portfolio. We got Amazon coming up. 30-second preview of Amazon.
Yeah, Amazon, it's the only of the Mag 7 that we feel that we haven't cut exposure to. You know, it's a 5% or give or take weight, and we're maintaining that. I think the data that you saw from Microsoft and today, the release of the cloud, is a very good omen. They're firing across all three of their businesses. You know, on the grocery side, the retail side, the cloud side, and this is the first time in a while that you've seen everything going in the right direction, and most especially on the margin. So, you know, we like the risk reward here. You know, I think next year you could get to 225. This year, probably upwards of 200. So, you know, it's one that definitely keep in the portfolio for sure.
All right, we're going to leave it on that note. Hey, James, thank you so much. James Chakmak, partner and tech analyst at Clockwise Capital, joining us on Zoom from Miami. A lot of names moving here in the aftermarket.
Hey, speaking of everything happening in the aftermarket, let's get an update from John Tucker. He's got business news and movements.
Yeah, it's big tech that is roaring in after-hours trading. Let's give you the wrap-up of the day, though. Wall Street finishing the day lower at the close. Stocks off the worst levels of the session. Traders initially rattled by that economic data, the GDP report today showing a slowing U.S. economy, higher rate of inflation. That also pushed yields to around the highest levels of the year. Now, after the close, Google parent Alphabet shares surging in after-hours trading. Alphabet shares right now up 12.25% for Alphabet. Of course, their revenue higher than expected, getting a lift from the cloud. They declared a cash dividend, 20 cents a share, authorizing also a share buyback all fan favorites for investors. After the close, Microsoft revenue coming in better than expected. Intel revenue, they came in shy of expectations. Intel shares down 8.9% in after-hours trading. Their turnaround still struggling. And Snap also projecting sales that topped estimates. They have an improving ad business there. Overall, the Dow Jones Industrial Average ending the session down 375 points, a 1% decline. S&P 500, that was down 23 points on the day, down just about 0.5%. And the tech-heavy NASDAQ Composite Index, that was down 100 points, down 0.6%. The two-year yield was up 6 basis points at 4.99. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. You had enough?
No, and I was just thinking, you know what I need? I need to go on a vacation.
Yeah, well, you know what?
We have a perfect guest for that.
Yeah, we really do.
That's a lot.
You might remember our recent weekend show and podcast. We talked about some big news in the world of hospitality.
I loved it.
I'm not talking to you.
Okay.
Michelin is capitalizing on its renown as an arbiter of fine dining through its annual Star Awards for restaurants. Remember, those max out at 3 stars. What they're doing is they're making further inroads into the hospitality sector. So, Carol, to that end, the Michelin Guide this month awarded its first honors for hotels, giving just 24 establishments in France the highest 3 keys rating. So, instead of thinking about stars for restaurants, think keys for hotels.
Makes sense.
And now, these keys are coming to the U.S.
We've got a great guest with us. Gwendolyn Polanek is the CEO of the Michelin Guide. He joins us here in our Bloomberg Interactive Broker Studio. First of all, is it Michelin or Michelin? How are you supposed to say it?
In France, we say Michelin.
Michelin, okay. Sold.
How does Carol Massar say it?
It's just so funny, like we talk about it in the newsroom. First of all, welcome. So nice to have you here with us. You know, it's interesting to see how you guys have done, it's not a pivot because you're still doing restaurants, but talk to us about what your thinking was of expanding into the hospitality, further into the hospitality industry.
For sure, and what people know of, obviously, are the famous Michelin stars, highlighting the best restaurants in the world, as well as famously anonymous inspectors. But what people don't know is that Michelin has been rating restaurants for the beginning of the last century, because first it was both an hotel and restaurant guide. And we are really back in this industry with selection and recommendation of the best hotel in the world. 2 weeks ago, we revealed the first distinctions with the hotel keys in France, because it's obviously the first destination in the world.
That's what we talked about for our weekend broadcast,
Yes.
Courtesy of our Pursuits team who covered it. It was great.
Yeah, and yesterday, because the US is the main tourism market as a destination, but also because American people are traveling the world, we decided to disclose the first keys for the US. So 124 properties have been awarded with 1, 2, or 3 keys, and 11 with at the 3-key level.
Okay, take a step back and just, you know, the history of the Michelin Guide has been one of, there's this like lore when you talk about the history of it, and the idea that the whole motivation for creating this guide was to get people to travel to restaurants more so they could Michelin could sell more tires.
And absolutely, and today the Michelin Guide is still part of the group Michelin. And the original idea was just to lead people to travel more, to help the motorists find their way, and find the best places to stay and to eat.
Is that philosophy still 100% the same?
I think the philosophy is still the same, and also the value, because what is core for the Michelin Guide is independence. We have a team of professional inspectors, so working full-time for Michelin.
It's great.
And selecting restaurants and hotels, paying their bill in full to make sure that we share the most trustworthy, reliable and up-to-date information to the foodies and travelers.
So you can get a job just going to restaurants and hotels.
Sign me up.
Yeah, to report on this, Carol.
Yeah, we have actually someone who does that. Kate Grader goes to restaurants. Having said that, do you feel like, Wendell, we've got about 30, 40 seconds, and then we've got to do some news, and we'll come back and talk more. But do you feel like it's almost a sweet spot in terms of what's going on in hospitality? Because it does feel like while people might cut back, it just feels like everybody is out there traveling, and especially Americans, but in general.
Yes, and definitely. We feel that there is a need, because there is basically too much information today in the travel industry. So people need an advice to make up their choice. And Michelin is really a selection So to ease your life and also to be an antidote to boring travel, because we are recommending places that have that are truly authentic, that have a supplément d'âme, so that have something specific to offer to ensure a memorable experience.
Well, and that's what we want to get into when we come back on the other side. Like, what is it that gives someone, 3 keys, 2 keys, 1 key? Same things with the stores, like how you grade it and how you decide where you're going to go, because there's so much out there. We're going to come back with Grendel Polanek. He is, of course, the international director of Michelin, the Guide, joining us. Actually, he is the CEO, forgive me, of the Michelin Guide, and joining us here in our studio.
Hey, first up, though, check on the latest world and national news. For that, we go all the way to Washington, D.C., to the Bloomberg 99.1 newsroom, where we find Amy Morris. Hey, Amy.
Hi, Tim. Harvey Weinstein's sexual assault conviction was overturned by New York's highest court. Bloomberg's Karen Moscow with that story.
The New York Court of Appeals has ordered a new trial for the 72-year-old Weinstein, arguing that the judge in his 2020 trial had wrongly permitted women who were not part of the indictment to testify about his conduct. The reversal marks a stunning turnaround in one of the highest profile convictions of the Me Too era. Weinstein will remain imprisoned. He was convicted in Los Angeles in 2022 of another rape and is serving a 16-year prison sentence. Karen Moscow, Bloomberg Radio.
The Supreme Court suggested it might drag out Donald Trump's claim of immunity from prosecution, an outcome that could doom any chance of a pre-election trial. The justices expressed skepticism about the former president's sweeping arguments for immunity. Justice Sonia Sotomayor asked Trump lawyer John Sauer about their end goal for this case.
This is what you're asking us to say, which is that a president is entitled not to make a mistake, but more than that, a president is entitled for total personal gain to use the trappings of his office. That's what you're trying to get us to hold without facing criminal liability.
Justice Sonia Sotomayor, a decision from the Supreme Court on this is not expected until the second half of June. Also, in another courtroom, Donald Trump's request for a new trial in a defamation case was denied. A federal judge in New York rejected Donald Trump's claims that the $83 million in damages awarded to writer E. Jean Carroll were excessive. Also, completely different news, the FCC restoring net neutrality rules that prevent broadband internet providers from favoring some sites and apps over others. The move effectively reinstates a net neutrality order the commission first issued in 2015. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Alphabet crushing sales estimates and announcing a dividend. Investors like that. Fellow mega cap Microsoft also beating forecasts today. Got all these results after the close of regular trading. Microsoft lifted by corporate demand for software makers, cloud, and artificial intelligence offerings. So this late rebound in stocks today coming after the market got rattled earlier in the day by data that showed exactly what investors did not want to hear: a sharp slowdown in the world's largest economy, stubborn inflationary pressures. Overall, at the close, the Dow Jones Industrial Average down 375 points. That was down 1%. And the S&P 500 closing 23 points lower. That was down 0.5%. The tech-heavy NASDAQ Composite Index on the day was down 100 points. That was a decline of 0.6%. After hours trading, shares of Alphabet surging up over 13.6%. Microsoft shares, they are up 5%. And the disappointment from Intel, still struggling with that turnaround story. Those shares and aftermarket trading down right now just about 9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. I'm hungry.
Yeah, I am too. I want to get back. Maybe you'll come in. Maybe if you're nice, we'll bring you in. We'll see.
I went and got a snack.
All right, let's get back to our conversation. Gwendol Polanek is with us, CEO of the Michelin Guide, back here, still with us in our studio. We were kind of talking off air. John was part of this, too, and talking about, first of all, how somebody becomes an inspector in terms of really for the restaurants. It's rigorous. Talk to us about that.
Well, let's say last year I received more than 8,000 applications to be an inspector. People don't realize that it's a full-time job, that we only recruit people that have a formal training in the industry, hospitality or restaurants, back of house, front of house. Then they have been working in a restaurant or in a hotel. And then we have a training process about 2-3 years with more senior inspectors on the field. And as an inspector, you have to eat out lunch and dinner about 300 times a year.
I know. Look at
see. Like, it sounds great, but
that's a lot.
It's a lot of food.
Well, and you're not around in the evenings.
Yeah, it's a lot, of course. But what is important is they have to remain anonymous. Also, just to ensure they have a regular customer experience, because we work for the customers, so they pay the bill in full as well.
8,000 applications for how many spots?
So today we recommend worldwide 16,000 restaurants, 6,000 hotels, but there are also a lot of restaurants and hotels we visit without retaining them as part of our selection. So there is plenty of restaurants and hotels to visit, but I won't share the number of inspectors working for Michelin.
Okay. Well, how many? But if I
they are called inspectors,
I want to get an idea
undercover inspectors
of the rate of acceptance. So if you have 8,000 applicants, like, are they?
Only
is it like getting into Harvard?
Only very few. And
like, are we talking like dozens of spots? I'm not talking about the overall number of inspectors.
What I can tell you is because today we are covering the world, and we have restaurant selection in more than 50 different countries, that we have more than 20 different nationalities of inspectors, men and women. And what is important also is to be able to have a proper understanding of all the hospitality and food culture of the world. Because, for example, inspectors based in the US, they also contribute to the selection in France, in Europe, or in Asia, as well as we have European or Japanese inspectors coming to the US to contribute to the selection.
You definitely, obviously, have standards. I get it, and you're being very, you're very secretive because you want to make sure that what is reported is just very true and accurate. And I'm curious, then, as a result, is there a cap on the number of guides of places you would put out? Because you are expanding a lot. So do you, to make sure that you are getting it right, is there a cap?
No, we are very consistent with the approach as well as the value. So we have a no-quota approach. So we recognize the quality where it is and whatever the style of the cooking, whatever the style of the place. So it's really depending of what the destination has to offer. And what can be said is, the culinary scene of the world as well as the hospitality offer is really booming in terms of quality and diversity.
Is there any chance that expanding can dilute the brand? Are you concerned about that?
I would say on the contrary, because one of the strengths of the Michelin Guide is first that it is a reference for the local people. Okay, Japanese people will consider the Michelin Guide as the ultimate reference for Japanese food, the French as the ultimate reference for French food, whether creative or traditional. So we are the local reference, and that's the reason why the international travelers, they trust the Michelin Guide, because they will have access, thanks to the recommendation of the Michelin Guide, to an authentic local experience.
Like, I think people would be surprised that you guys are in Colorado, right? You launched, is it last year?
We launched it last year.
Last year,
So,
okay.
So today, yes, we are covering, I would say, only 7 main destinations in the US with our restaurant selection. But definitely the plan is to cover the US as a whole and to be able, beyond the US, to recognize all the culinary culture and the hospitality culture of the world.
So, so even if in a place like Colorado, where there's only maybe a handful of places that actually got a star from you guys, that's okay. That's valuable to you.
Yeah, but the point is, more than ever, there are great places to recognize everywhere.
Yeah.
So because we don't compromise on the value of the ratings and we need resources to make it, we are expanding gradually, fast, but gradually. And the plan remains the same. It's in the years to come to be able to cover the US as a whole, to make sure that we left no stone unturned.
So on that, how do you choose the cities that you're expanding to, and when do you expand to them? And talk about deals that you guys have with local tourism agencies.
No, but first of all, it's always a Michelin decision first, based on the culinary potential. Okay, and so we will, in our priority, of course, we'll take into account also whether it's a tourism hotspot, as well. And what's the value of the Michelin Guide? Because I think your question is related to the business model. Let's say, our qualified audience, okay, the discerning foodies and travelers. And basically for the guide, we have revenues from restaurants booking.
Okay.
From hotel bookings.
Okay.
Of course. And we have also partnerships with, brands, fashion, food and beverage that are willing to be exposed to our discerning audience.
And tourism agencies?
And tourism agencies or governments that are willing to leverage on the Michelin Guide as a platform to promote their destinations.
But you're not going to do it if you don't like the place.
Obviously.
Okay.
We have a lot of demand to expand.
Yeah.
Today, we have to manage expectations because inspectors are scarce resources. We need to hire them.
Yeah.
We need to train them. So we expand only when there is a very mature culinary potential.
Is the Michelin Guide profitable on its own?
On its own, it's really sustainable, but I won't be able to share the detail of the results because it's Michelin as a group don't share the details of the different business line results.
I want to know what an inspector makes.
It doesn't. An inspector, you know what an inspector doesn't make?
Come on, is it like
an inspector doesn't
above?
make any food for themselves because an inspector's
Well, how do they
eating
get
every meal.
reservations if it's a really hot restaurant in a local area?
But that's a good point. Today sometimes it's quite a challenge to get access to some of the restaurants that are almost
That's a
overbooked.
good point.
So
if they're a nobody.
And yeah, they have to blend in the crowd. So we do not have VIP treatments. So we have to queue. We have to make sure that we are pushing the doors. But we also have to change the phone numbers and the credit card numbers to make sure that we remain anonymous.
How many times does an inspector have to eat at a restaurant to make a determination?
So one of the golden rules is that the same inspectors is never going back twice to the same restaurants. And instead another inspector or several inspectors, we come again and again, but then it's up to them to decide how many times they have to come back. It's depending on the consistency of the food offer, and it's the same for the hotel. We come as often as necessary, but it's truly a human approach. It's not an algorithm. It's about living the experience yourself.
How many stars do you think he's going to give us after this interview?
I don't know. I'm a little afraid. But I know if you give us... How many stars would you give us?
Well, at least 3 for the smile.
Oh, there we go. Thank you.
This has been so cool and so interesting. Promise you'll come back as you guys continue to expand the brand. And yeah.
Next time in disguise, though.
Merci et bon appétit à tous.
Lovely.
Thank you very
Thank you so much. Grendel Polanek, he is the CEO at the Michelin Guide, joining us here in our studio. I want to go travel.
Makes me want to go on vacation, makes me want to eat some good food in restaurants.
I'm hungry. We're always hungry. All right, this is Bloomberg Radio.
headlines on Bloomberg Radio.
And I'm John Tucker in the news. We'll look at company news for final. After the bell, let's do the wrap-up of the earnings one more time. Alphabet reporting first quarter revenue exceeding expectations. It was lifted by growth in its cloud computing unit. So the Google parent reporting sales, when you strip out partner payouts, of $67.6 billion. And that surpassed analyst estimates. The company also saying it would pay a dividend, 20 cents a share. They're also buying back an additional $70 billion in stock. Investors like that. The shares right now in after-hours trading up 15.7%. Microsoft, their quarterly sales and profit climbing more than projected, and that was lifted by corporate demand for the software maker's cloud as well as their artificial intelligence offerings. So you had revenue in the third quarter rising 17%. That was $61.9 billion. Profit worked out to $2.94 a share. CEO Satya Nadella, he's been infusing Microsoft's entire product line with AI technology from their partner OpenAI. The bet is paying off, apparently. Some customers adding AI tools that summarize documents, generate new content to their office productivity software, and signing up for the cloud subscriptions with OpenAI products. After hours, shares of Microsoft, they're up close to 5% at this point. And then there's poor Intel, biggest maker of personal computer processors, tumbling late trading. They gave a lackluster forecast for the current period. They're still struggling to return to the top tier of the chip industry, struggling with this turnaround story for Intel. Those shares right now down 8.6% in post-market trading. And that is your company news.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Tim and I getting ready to wrap up on this Friday's Eve. Just a few minutes left here.
It's not Friday's Eve for everyone.
No, it's actually Friday for people like Doug Krisner.
Yeah, who joins us right now for a preview of what's coming up.
Are you ready, man? Did you see in the after hours?
I've been trying to keep up with this. It's unbelievable.
Today's a unique day.
It's heavy.
Yeah.
But before you get to the earnings, which happened after the bell, you have to talk about the data.
Yeah.
And the worst case scenario for the Fed right now.
Yeah.
Right, which is stagflation.
Right, exactly.
So yields up, stocks down. The dollar was a little weak, not by much. We've got a Bank of Japan meeting later today. Now, we've seen a lot of weakness in the Japanese currency, and there have been a number of suggestions that maybe the monetary authority in Japan would intervene to address that, but I think the smart money says, get out of the way of the Bank of Japan, let them make their move first. We'll see what the currency does in response, and then
if it does
may
nothing.
be, well, it may be time for intervention at some point.
Yeah.
But you're right. I mean, earnings, the Alphabet numbers, John was just talking about Alphabet.
You do a dividend, you do more buyback, and you're like, okay. But the business also, we went through every metric.
Did you see the Bill Gross stuff today on X?
I saw a little bit.
He was
the what stuff?
Bill Gross.
Bill Gross.
No, I haven't.
Tweeted today. I tweeted. Can I say that? Do they still say tweet?
It's better than saying X.
Yeah.
So he said that this is the day the music died. You know, when you're dealing with kind of this stagflation. So don't buy the bond market. Put your money into value and avoid tech. Well, look at what tech delivers. It's really tough to argue the tape right now.
Exactly.
Right?
And the thing
Against
is,
the tape.
you know, Microsoft, the Azure numbers, cloud-based. I mean, what's
Snap,
interesting.
Did you see the Snap?
Yes,
Yeah, but Carol, when I brought that up, Carol pointed out that Snap going into today has been down, what did you say, down 30% so far this
almost
year?
33%.
Yeah.
But it's now up. I mean, it's going to erase most of it.
When it, after those numbers came out.
Yeah, kind of interesting.
Yeah. So we're going to talk a lot about the earnings, the AI. Next week,
Short position was also 8% afloat on Snap. So if you were negative, right? So
a little bit.
Fair amount.
But I think
but not all of it.
We've seen that with some of the companies that have had, you know, major moves.
Yeah.
The other thing that we've got to consider is the downstream kind of impact of AI, because we're talking a lot about companies that are investing in like the Microsoft, which is like kind of co-pilot stuff where you've got, you know, software program that's being supplemented by artificial intelligence.
Companies are buying this stuff.
They are, but we'll see at some point whether or not their productivity is enhanced by that and whether they continue to be buyers. And then the chip story. Next week we have Samsung earnings, and I was talking to Ian King today, just informally getting some background, what to look for in the memory chip market right now. So a lot of the focus is obviously on these AI data centers. Speed is going to, and to try to get power consumption down, although I don't think they're really too concerned about the memory chips as much as they are the graphics processors. They are energy intensive.
Right, they eat up a lot of energy,
Right.
and so that is certainly a thought point in a big way for those makers.
You mentioned chips. We heard the numbers from John Tucker, but worth
Intel.
Yeah, worth reiterating what happened with Intel,
Yeah.
down 8.3% right now, plunging just after. Wow.
They haven't really been playing too much in this AI space, right? They're the chips that we use for the personal computers. But the other thing that this company, John alluded to the fact that there's this turnaround plan they're trying to get off the ground, right?
Gensler, right?
But it's based a lot on the foundry business. They want to become builders of manufacturers of these chips in the same way that TSMC is.
Yeah.
And that's going to take some time. That's going to take some time.
I think that, investors are, there's at some point, our headline on the story, forecast, Intel's tepid forecast spurs fears about a comeback. Can they actually pull this off? It's kind of shocking to consider that they were the leader in the industry,
right?
But it's not been that way for a while.
In an interview, the company said that the forecast was hurt by packaging capacity shortage, and said could have sold more AI processors.
What does that speak to? I don't know.
Logistics?
Can we just go to Paris?
Maybe. What's happening over there?
We had the Michelin guides. They're now, it's restaurants, but now they're rating hotels. They're rating hotels.
Oh, they are.
Good food and good wine. All right, that's going to do it for Tim and me. Don't go anywhere. Doug is coming up next, Daybreak Asia, but Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power.